The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's get some business out of the way. The reason why I like the Beach Boys so much is I happen to know those dudes. I met them back in the early 80s. My best friend at the time was Jay Cross, who actually worked for Amos Hofstadter for 4 years and set up the computer programs for Commodity Corp back in the mid-'60s. And Jay was a member of the Malibu Bay Club, which is right across, what used to be right across the street from the Paul Getty Museum. And we used to take the kids there on the weekends and stuff to play on the beach, which was fun. And one day he asked me to come over for lunch, and so I did. And not Brian Wilson, Bruce Johnson was there, and he's, of course, one of the Beach Boys. But most of you folks don't even know this, but Glenn Campbell was one of the Beach Boys in about the second record, I believe, but then he went out on his own. But anyway, we were having lunch there, and the ambassador of Sweden, a woman was there, and she was invited. There were 6 of us there, and Jay introduced Bruce as one of the Beach Boys, and she looked at him. She says, "You're quite old to be a lifeguard, aren't you?" And it was so funny. Everybody laughed. In 1986, I actually worked for the Beach Boys for a weekend. Jay and I went up to South Dakota, up in Rich Anderson's area, who will be my guest here at the half hour. Rich helped us with this deal. We were looking at a cattle feeding operation that was a flat slam dunk, but their business agent didn't allow them to do it. But boy, it would have been a big one. Anyway, let's get on to the markets. I've posted the first chart in here. This is where this whole thing started in the market last night. Of course, we were strong yesterday, and then we had the big gap up, as you can see here last night. And let me give you a little story about being having your name out there, writing a book or whatever you want to call it. I have a phone call last night at 9:29, I believe, when Hong Kong was getting ready to open, and one of our listeners from Hong Kong called up, and we had bought the Hang Seng down at the 20,000 level back on April the 7th, I believe, and it made well over 600 points, and we got out of it because there was strong resistance there, as you can see, at 2060, and he was very upset. I said, "What are you upset about?" He says, "Well, I got out." I said, "Well, you made a lot of money." I said, that's over $5,000 in just a matter of 5 days. Isn't that enough?" He says, "Yeah, but I could have made an extra $1,000 if I would have stayed in." And he says, "What do you think now?" And I looked at this chart that I'm looking at right here. I said, "Look, you gapped above the 786. I said, "There's a high probability it's going to go a lot higher, and that's all I can tell you." And he said, "Okay, well, all right." He was not very happy for some reason, and so he hung up. And I said, "Okay." This was at 9 o'clock in the morning. Well, guess what? At 11 o'clock in the morning, I get another call. And he is calling me back again. And he's thanking me. He said, "Oh, thank you so much. Thank you so much." And I said, What are you thanking me for this time?" And he says, "Well, the market just took off like a rocket, and I went back in because you said it was going to go higher." I said it was going to go higher. I said, "I didn't give you a buy signal." I said, "I'm just telling you that it was probably going to go higher." That's chart number 2. Then at 2:30 in the morning, I get another call from him. And finally, he let me get the last chart up here and see this. And then this is the crazy part of this business anyway. We'll see what's going on. You'll see we got all the way up. We went way past the ABCD. We are within 100 points of the 61% retracement of the move down in the Hang Seng. This is going to be a real interesting time period that we have going on right here. So let's keep an eye on it. All right, let's go on to the next one. We've got a relatively lot of things to cover here. I wanted to show you the gold and silver index. This is the daily chart. going back several years, going back 2 years. I want to put this up so you can take a look at it. I don't know if this means anything or not. This is the main thing that you want to be watching, is that we hit an exact 61% retracement of that high from June of 2014. I mean, it was within 10 cents of an $80 stock. Closed a little bit lower than that. Now, gold has backed off about $20 so far today. No, $25 so far today. And any close below, I believe, 1235 would tell you that you probably made some type of a major high in gold, because, you know, gold did not make a higher high, folks. I mean, we had higher highs at 1286, then we had another one at 1272, and then the last one was 1265. So that's not necessarily a very good sign. And even with silver, if you take a look at silver, silver basically, you know, all it really did was go up and took out the highs of March by 4 cents. And now it's trading below $16, I believe. That's not what I think is a very good sign. We'll take a look at this chart here, and just to see. Remember, I'm a chartist, folks. I don't do the fundamental stuff. I leave that up to the smart guys. But we'll put up this, and you'll see that this is what happened with silver. We took that out by we took it out by actually 4 cents is all we did. Now, I would thought it would have done more, given the fact that the miners were going crazy. In fact, they did come out last night and found out that the gold and silver miners have banded together and have found a cure for cancer, and that's why they're so strong. And if you believe that, I still have 4 shares of the Brooklyn Bridge available for purchase. Thankfully, one of our listeners here at TFNN was kind enough to send some information on that I think we should have a little bit of interest in. I missed this because I don't trade GLD, but I did want to show you the fact that the GLD, we were watching that 20-man line, if you remember. Now, you'll see it hit the 20-man line, but it didn't make the 382. It missed the 382 by about $1.20. And of course, you can see here, this also has not made a new high as of yet. And you could actually make a case for a potential head and shoulders pattern over the past, several weeks on this, if in fact it does turn down from here. All I'm saying is, folks, when you see something like what happened in those gold miners, that's an aberration, and give it a little bit of room. That's the key. And the fact that XAU, which hits these numbers, spot on time and time again, not all the time, but most of the time, hit the exact 61% retracement 2 years ago. And that's one heck of a move. So you want to watch that, very, very closely. Whether it means anything or not, I'm not really sure. Someone's asked a question by email, was about the euro. The euro, we talked about this yesterday. It went up to the exact 786 retracement, to the exact tick. It didn't go one tick beyond it. And it has broken well over 160 pips, to the downside. So we're going to take a little break here. 877-927-6648, and Rich Anderson at the break.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I believe we have Rich Anderson on the line right now. Is that right, Rich?
Hi, Larry. You betcha.
You're going to bail me out of this show today? They were ragging on me for playing Beach Boy music for my show, and I can remember 30 years ago when Jay and I went up to South Dakota to look at that cattle feeding operation, and they sure passed on a good deal. But anyway, thanks for joining us today. I really appreciate it, as you well know.
Yeah.
Do you have anything that you, first of all, people are going to be asking us about the grains because we've had a pretty good move here in soybeans this week. They've been very strong every day this week. What's going on over there?
That is all about rain in Argentina.
Mm-hmm.
And the continued rain delays harvest and therefore delays shipping of beans to China. You know.
Now, does Argentina, they don't produce as much as we do yet. I think Brazil does, but Argentina is probably, what, third in the world in production?
Right. I usually clump the two of them together, and they're way more than the U.S. nowadays.
Mm-hmm.
They're significant. You know, and then I suppose the other thing in Brazil, you know, they've got a constitutional vote on impeaching the president on Saturday. And I don't know enough about the political workings of their government to know how messed up that might make things and whether that would increase some of the difficulty in getting grain loaded out too. I don't know. It's just another possibility. I do know that the Baltic dry freight rate has tripled in price over the last 3-4 weeks.
Yes, I saw that on Kramer last night. I hardly ever watched that, but I was. And I saw him talk about it, so I listened to it.
Yeah, so that's kind of an important deal. Obviously, there's been huge increase in imports from Hong Kong to China, and that's just a de facto way to move currency out of the country now that currency control started on March 1st.
We've heard about that before.
Right.
Sarah being from Hong Kong, we actually went to dinner last night with one of our neighbors, and he was talking to us about, showed us an article about how people were, moving money around, out of China and the different things that they do. One of the things that Sarah told me about was the fact that these insurance people they'll come in from China into Hong Kong and buy the policies, because that's just another way of taking money out of China. But that's way over my pay grade. So.
Oh, sure, that makes sense. We had a friend down in Arizona who did that years and years ago, but didn't reserve.
It wasn't me, Rich.
No, I know, but he didn't reserve for payments. He's buying them from the insurance company.
Okay.
And you have to reserve X amount. The insurance companies are very particular about that.
Amen.
Rich, I saw the silver make new highs yesterday. And
yeah, made a new high by
third high in silver.
Yeah, by 3 cents. I thought it was going to, make some type of a breakout, but we didn't make a high in gold, which was really surprising to me. We've had 2 lower highs now in gold. What's your feeling on the metals here, Rich?
Well, I'm beginning to wonder, because 3 drives to a top is one of the favorite things I kind of watch for, and then particularly if I see a divergence, that makes it quite interesting to me. But when you have a divergence between gold and silver, that's just another factor to take in. At this point you got to give silver the benefit of the doubt. But were it to take out yesterday's lows, which is way down there, then something's wrong. As long as it doesn't take out yesterday's lows, I'll give it the benefit of the doubt. But I'm kind of thinking that this will be some kind of a failure move. I mean, you've had a huge move in crude oil, and that's helped the Canadian dollar. A huge move in iron ore because of China, and that's helped the Australian dollar. And the U.S. dollar, on the flip side, was weak. But those things might have kind of run their course, and so then there's a lot of ways to play the reversal. You just pick your favorite, whether it be short side of currencies or short side of metals. The key thing on the grains is the weather this summer in the U.S. in the Midwest, and
we always have a few scares
to be delivered there. But if things line up, I mean, we could get kind of active, because what you find is that the markets get overly short. They get overly short in the wheat, they get overly short in the beans, and the corn, and the meal. I mean, look at the meal; it's gone vertical up. And when they get overly short, and then there's nobody left to sell, we have some pretty fantastic rebounds.
Well, we've seen parabolic moves. They always end the same way, parabolic to the downside. There's no question about that.
Faster on the downside than on the upside. That's just a truism.
Yeah. How about the thing that I'd like to talk to you about? Someone's asked a question about the copper. Any feeling on copper, Rich?
Well, Dr. Copper is the best indicator of the economic conditions in the world. Some people would dispute that and saying the world's changed a lot, but I think that's a fairly true statement. The outside, almost outside day, the big update yesterday shows you that sellers run out of gas, and they got chased out, and they're getting chased out again today. I think what I personally would like to see, I think that we'll go back down at some point and retest the January lows, and we'll look ugly as heck, and that will be the time to buy. Not unlike when the S&P, made that low back on January 20th, rallied like crazy, and then revisited that low in February, and then that really was the start of a market. And I kind of think that's what's likely to happen in the copper.
Yeah, Rich, you were on our show. We'll have you on every couple of weeks, but back in mid-February, we had you on when the cattle were trading at around 135, 136. They've since dropped down to the low 120s. That's a really nice move. What do you see from here on in the cattle hogs?
Well, the nearby April, which is in delivery, so it's not the kind of thing that I mean, I'm there, but I would not recommend it for anybody that's not a professional trader. For obvious reasons. Most clearing firms won't even do that. So
So we got June cattle. We got June cattle around little under 123, and hogs are lower too. Do you think which is the better buy if someone wanted to buy the hogs or the cattle?
Well, cash hogs are $8 to $10 lower, and cash cattle are $8 to $10 higher. So, the one you'd buy is the cattle, and the one you'd sell is the hogs, based on that. Now, that's overly simplifying it, but if you're going to go by,
we got to take a break here, Rich. Can you stay with us, and we'll be right back after this break? Hey, thanks a lot.
TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We have Rich Anderson of Anderson Capital Management on the line. And Rich, we've had a request from one of our listeners to talk about coffee. Rich, I don't think you and I have talked about coffee in maybe in 40 years. So if you have any input, we'd certainly like to hear it.
Oops. On a seasonal thing. And then when it rallied up into the 130s, I got out. I got out too early, but that happens. And I had some interest in it at 120, but I'm kind of thinking there's the obvious plateau there that they might go run for stops, and I'd like to see those stops taken out in that 1340. Were they to do that and fail, having a third drive to a bottom, I'm going to have a serious interest. You asked about the cattle hogs. The normal seasonal is to buy cattle and sell hogs. That seasonal has worked 14 out of 15 years. But the problem is you're buying cattle that are, $10 over. You're buying the what would you be buying? You'd be buying the June cattle, so they're $10 under cash, and that's the reason you're doing it. And you'd be selling hogs, and hogs are about $10 over cash. Now the seasonal normally is for cattle to make their highs in the spring and have a $10 break. Well, June's already $10.65 under April right now, so that's kind of built in, maybe more. Another relation, I do a lot of relationships. I'm buying feeders and selling fats. There's a trade end of April to buy meal and sell oil. The problem is I did that trade a week ago. First I sold oil because I thought that the crop report from Malaysia would come out disappointing with how much of a production cut they had. And then I bought some meal as a hedge, and that's already moved like $1,500-$1,600 since last Thursday, But, once they get a train going on these relationships, they often go a lot further than you think. And it's hard to have a bull market in beans with oil, which is roughly 40% of the contract, and it's a whole lot easier to have it with meal. It's just, it's already had quite a bit of a run, and I'd only be interested in pullbacks.
Okay, that sounds really interesting. Now, we had one other question, and that was about corn, because, we've had a, really disastrous report on corn, and yet it's come back, back into the buy zone pretty much after the ABCD pattern. Any feeling on the corn?
Well, I think it has a value level until have some more certainty on the crops. We're just getting into the planning phase right now. So the markets always find some reason for strength and worry, or the worry causes a strength. So when we're in the planning season, and once we got the crop up and running, then it's the strength might just all of a sudden disappear. I'm hoping that the El Nino turns into La Nina, and we have a year much like 2010, where we went down and made our lows end of June, early July, and then we had a 60% rally. But there's a lot of things have to line up, Larry, and I'm just, at this stage, I'm monitoring them. I have a list of things, and I monitor them, and then when the triggers occur and they get at the levels that I'm interested in, that's when I put on positions.
Sure, I understand. Just, Rich, you used to work with Steve Moore out of Oregon, the guy that's really good with seasonals. Do you still work with him?
Well, I still take his service. He was related to Stotler.
Oh, sure. I remember back in the old days. Absolutely.
And when Stotler went down, Steve got the database, and the other guy that got the database, in my understanding of it, was David Hightower.
Uh-huh.
David, he does some seasonal work, but it's really Steve Moore and now his daughter who's doing the seasonal work. And like the meal oil spread, when I think it's April 27th is his date. So that date comes and we've moved $2,000, $2,500, you can put that on, and then there's a $1,200 correction, which means nothing. It's just a 50% retracement. So you got to be careful about picking your spots, and it's a whole lot harder to manage risk and spreads because they're not trading every minute of the day. So it's not like you can work stops easily. You know what I'm saying?
Sure. We'll switch over to financials here for a little bit. Before we get to that, we've had a question from Mr. Z out of the den on the crude oil. We did the same thing in crude oil that we did in silver. We took out those highs of March 18th by just a little bit and then backed off. You have any feeling on oil?
Well, my feeling is that OPEC members always cheat. My feeling is that Iran has to increase production because they haven't been producing for the last several years. My feeling is that Saudi Arabia wanted to completely destroy the frackers, and they hurt them, and you put some of the smaller ones out of business, and it's tweaking the banks a little bit because they thought reserve lending was risk-free, and they're finding out, I guess it isn't risk-free. There's an article in Bloomberg about that. But here's the deal. Like just up North Dakota, there's almost 1,000 ducks that's drilled and uncompleted wells. So you get the price high enough, and right now, if you go out a year, the price is relatively flat. But if there starts to be a big carry, they'll start selling the board, and then they'll turn some of those wells on. And, that's exactly the opposite of what the OPEC wants. So I think this is maybe up here for helping them to get a deal on the Aramco shares that they're going to sell and get some hedging on. And I would, again, just like in copper or coffee, if we're down and dirty sometime this summer and things look like the wheels are falling off the bus, I'm going to take a serious look at it. If you remember back, Barron's had a front page on February 8th that had a picture of a barrel of oil, $20 a barrel.
Oh, sure. We've heard that.
That's always the buy signal,
Yeah.
Street Journal, Barron's, when they do that kind of stuff, it's a buy signal. It's just indeed.
Time Magazine, too. That's probably the number one.
Yeah, absolutely. So I think we will revisit the lows at some point because there's just too many of those drilled wells. Right now they're focusing on the rig count, but the rig count doesn't mean anything because those wells are already drilled. All they have to do is complete them. Mm-hmm. And, the rail car rates are relatively low out of North Dakota now because of the slowing of shipping. So I think there are some different dynamics, and with less freight, you can sell your oil a little cheaper and still get the same profit.
Mm-hmm. We have a question from RJ in the den about if you think this 123 level in the June cattle is going to hold. Do you have a technical opinion or fundamental opinion on that, Rich?
Well, I bought April cattle yesterday.
Well, that's in the delivery, though. You have to be with the big boys to do that.
Right,
He's talking about June.
But April and June are kind of – I can't really see April going much over another buck higher versus, say, June. Mm-hmm. So if the April lights a fire, and they get some – I think we could say trade cash 136 to 138 and then, before April goes off the board. And that should pull the June up to 25.5, 26. At that price, I'd say it's fair value. I'm really just buying dips right now, and then we get the rallies in that 126. I'll be a seller, and that's.
Okay. Well, listen, thanks for joining us today, buddy. I really appreciate it, taking your time. We'll have you on again soon, okay?
All right, thank you.
Thank you, Rich. Rich Anderson, Anderson Capital Management.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've got the stock market opening very sharply higher today with the Dow up 132, the composite's up 40, the Nasdaq's up 36, the S&P is up 12. We got gold down $11, and silver down a little also. We've broken quite a bit. Well, so silver's actually up in the day, holding 1628. I wasn't aware of that. That's actually a pretty good sign. Platinum is down a bit, so we'll see how that holds up. Today I posted the chart of the DAX because I wanted to show you the relationships of how these things move together. Once once these things gap, you'll notice the big gap that we had in the DAX last night. That was equivalent to about midnight in New York, and that was the pre-opening or the opening part of it. But what happened after that? You see the big move that occurred at that point, and we just absolutely exploded on the DAX also to the upside. It just kept going higher. Oops, 1 second here. Let me see if I can get this in here correctly, and then I'll be able to post the chart. Hopefully it will post correctly. I think we're okay there. We'll take a look at it and see that it lasted okay. But anyway, it got all the way up. It gapped at 9,000 and then went up to 10,000. Those are huge moves. That's $2,500 per 100 points. So, that's equivalent to about 1,000 Dow points. So these are really, really big moves that we're having in the German market. Now, it's been bearish, and we're having one heck of a short covering rally, if that's in fact what it is. We did have the big ABCD bottom down there on April the 6th, but we've come out of here, like a rocket ship so far. So we'll see what's going to happen with it. The stocks that I've been looking at over the weekend, and I looked at them again last night, and I factored in where they were probably going to open today. They still have bearish patterns, but if the Dow gets up over, I believe, 250 today, all this is not going to mean anything, and we're probably going to go higher still, and then we'll see what happens after that. But we'll do one thing at a time. As far as the dollar index is concerned, I think that we're very close to that ABCD pattern. In fact, we probably missed it, given in fact what the euro did. The euro stopped exactly at that 786 retracement, and since that dollar index is 53% weighted on the euro, you have to be able to see that what we're watching here, and then we'll see what happens from that level. There should be some pretty strong resistance at 2080 in the S&P, and any close above that, you're looking at a potential to take out that old high 2137, and that's the time where we bring out the old chuck wagon, put all the horses in a circle, and wait for the Indians to come, because this old cowboy is going to take his little donkey Giuseppe and ride off into the sunset. So we'll wait and see. I had an interesting question during the break here about cup and saucer patterns, and I don't use those very much, but I happen to know Bill O'Neill quite well because his son was my daughter's first date when she was 14 years old. And that was back in, oh my God, 1972. And he was just starting daily graphs at the time. And he made the biggest bet of all, in my opinion, in the early 80s when he went against the Wall Street Journal. And everybody said he was just throwing money out the window. And he used all of his own money and his family's money. He didn't go public. He did it all himself. And he actually has a bigger subscription than the Wall Street Journal. He passed them many years ago. So my hat's off to him. He's a really nice guy, too, and very, very philanthropic besides that. So he's just a super nice guy. Okay, on to the next question that someone had, and that was about I just answered the question. They asked about the S&P, and I said if it gets above that 2080 level, it's most probably going to run, a whole lot bigger than that. So we'll see whether that's going to be the case. We'll wait and see. The emotionalism that happens in these markets, we experience that quite a bit, and you're seeing it so much that you're looking at same thing in the gold miner stocks. This past week, we had tremendous gaps. It was like, like I mentioned before, it's like they'd found a cure for cancer. Now, when they all move in unison like that, I have to assume that that's just, people that are saying, okay, I've had enough, and they're getting out of short positions. That would be my assumption. Now, I've looked at the the XAU. I've looked at the American Barrick, and in fact I'll put up American Barrick here because that made a very nice pattern. If you look at we had a 5-wave expanding triangle with American Barrick, and then right after that, we had a 3-drive pattern just yesterday, and now it's already started. It's down about 4.5–5%, already today. Whether that means anything or not, but you want to be able to look and see, on that, and we'll see what's happening, with that. So that's basically, what I'm looking at in the gold market, and also in the stock market. The grain markets, I think we'll wait for a pullback, and we'll see if we get one. These usually don't run forever, but one thing at a time. The Japanese yen versus the U.S. dollar. We made a major bottom in there, folks, I believe, down at that 107 level. Well, we came very, very close to the exact number we were looking at. I believe the low was 107.30, and we got down to the 107.20 level, I believe. No, excuse me. We were looking for 107. It got to 107.30. So we'll be able to see, what's happening with this. But it's really interesting that this was almost a perfect 20-man line, and now we've already rallied up to the 109 and change. We've rallied over 200 pips in this just in the matter of the last day. So this could be a potential pretty good bottom here in the yen. We'll be able to see what, if it continues to do that. But coming off the bottom like that for 200 pips very, very quick, makes a lot of reversal. Remember the old adage that anybody that can any market that can give you, 25 handles can take 25 handles away from you. So just be careful in here, and I think it's important that we do that. One other thing is that Norm Winsky's offering a free program to teach you how to do some of this intraday timing stuff using astrology. If you'll contact him, he's offering it 13th, 14th, and 15th, I believe, and also over the weekend. So get in touch with Norm. He's a really nice fellow, and it's free. So it does have a money-back guarantee, so you can't go wrong with that. That's the main thing that you want to keep an eye on. That's the bottom line that what we're watching. So we're having a lot of strength here in the market. We've got the Dow still up 133, haven't moved too much from where we were. The S&P's made a new high here at 2070, and the NASDAQ is up around 45.37, so it's acting pretty strongly, also up about 50 points. So we'll see how the market comes in. We've got gold down $15, and silver's now backed off 12 cents. It's down 6, so we'll see what happens there. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart from our good friend Jim Bartolioni. It shows the NYSE going back to 2007. And we had the big move. By the way, if you get a chance to watch the movie The Big Short, that's a great movie about Michael Lewis's book. And also there's a series out there called Billions on Showtime that's really good. And it's basically a takeoff on Stevie Cohen. And it's very, very good. Sarah and I have watched every single episode, and it's extremely well. Paul Giamatti plays the Attorney General. But anyway, the good part about it, it's pretty good representative of some of the things that actually happen, in the financial markets. And anybody that thinks some of this stuff is not always held to the vest, you're being a little bit naive. So just to keep that in mind. But if you're looking at this New York Stock Exchange Index chart, if that goes up and makes new highs, then boy, oh boy, that's going to be really interesting, because it's going to be a failure of one of the most important and major patterns I've seen probably in my whole 55 years of doing this. So we'll watch it very closely. Right now, we are taking out that high that we made just the other day at the 61% retracement. Whether we close there or not, remains to be seen. But we need to get the Dow up about 250 points to really get it, moving to the upside. And it'll certainly has the possibility of doing that given the momentum, that we have going. I had an email from Shane Smolian from wolftrader.net yesterday, and he was saying that this market moved up yesterday even without Fed help. So somebody was in there buying, that's for sure. So we'll see, how the market, keeps on going. So we're having a, one heck of a rally starting out this morning with the Dow up 125, the S&P up 12, and the NASDAQ up 46. And we've still got gold down 14, silver down 10. And that's about it. We got crude oil down about 71 cents. It made a higher high than we did on March the 18th, and then it backed off $6 a barrel. And it's important that it gets back above there. It shouldn't get much below $40 a barrel if it's any good. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.